There's a bloodbath in the stock markets, all thanks to Trump. So, this video will address that one question on your mind. What should you do with your investments? And here is our hot take: just buy equity. Yup, it sounds crazy at first, but all I have to say can be seen in this chart of India's stock market over the past few decades. See, it doesn't matter what big cataclysmic event has rocked the world over the decades. The Indian stock market has been through it all and soared higher and higher. Of course, it has had its moments of steep falls, but that's the way it is. So, the only reason that you shouldn't be invested in the stock markets is if you believe India's economy is doomed, that it's on the brink of a collapse that it will not recover from, and that companies will suffer and die. If you believe that, stop watching this video now. Really. If you don't, I've got something more to tell you. Control the controllables. I'll explain that. Because the world is uncertain, it's hard to predict what the stock markets will do the next day, let alone for the next year. You don't know what Trump will do next. You don't know if there's going to be another pandemic. You can't do much if the RBI cuts rates or hikes rates. You can't control any of that. Yet, your human brain wants certainty in a world filled with chaos. So, what do? Well, you tame the chaos in your mind. You accept that there will be times of deep market corrections when it falls 20, 30, even 50%. You accept that it's impossible to predict the exact moment these corrections will happen or how deep it'll go. And you also accept that if you invest sensibly, month after month and year after year, you'll reap the benefits. So here's another chart for you to keep in mind. In the past 15 years, since 2010, if you'd invested a monthly amount of 10,000 rupees in a Nifty index fund, a total investment of 18 lakh rupees would have turned into a massive 55 lakh rupees today. All you have done is control the controllables. You have invested diligently month after month while mayhem was unfolding. You invested through the rupee taper tantrum of 2013. You didn't bother about the market fall in 2018, and you didn't panic during COVID. You were diligent with your investments. And that chart is proof that the market rewards patience. Now I get it. It can still be scary each time the market goes through a bear market and you see your net worth drop by 20 or 30%. So if that really bothers you, here's the simplest piece of advice. Buy a little bit of everything, including stocks, gold, and bonds. Look at this chart of the asset class returns over the past 2 decades. Investing in a diversified portfolio with 50% in the Nifty 500, 30% in debt, and 20% in gold would have kept things under control. The worst fall you would have faced would have been a 20% drop. And that's not such a bad deal, is it? Especially if you can make good money without feeling like you're on a scary roller coaster ride. So yeah, I don't know what will happen next. I don't know which asset class will emerge a winner this year, but I do know this. I do know that our economy isn't on life support. I do know that the country and its stock markets are strong and resilient. I do know that you actually don't need to be overly pessimistic. And I do know that you need stocks, gold, and a little bit of everything else to create long-term wealth without losing sleep at night. So just keep calm and carry on.